Hi everyone, welcome back. Today we're talking critical illness cover, also commonly known as CIC, C-I-C, for obvious reasons. So let's kick it off. What is critical illness cover? Essentially, it's an insurance policy that helps to protect you if you become critically ill during the term of the policy. So it pays out a tax-free lump sum that you can use however you want to, whether that's to help cover health costs or monthly expenses or lost income while you recover and get better. It can be combined with other sorts of insurances like life insurance, or you can have it as standalone critical illness cover. So how does it work and how is it different to other sorts of insurances? Well, essentially you pay a monthly premium for the term of the policy, and if you're diagnosed with one of the conditions that are covered by the provider, they'll pay you out the lump sum. Some policies do include extra cover, such as children's cover, or extra benefits that offer medical support and wellbeing benefits. So it's really important when you're taking out critical illness cover that you look at what providers offer what benefits, because some may be more expensive in terms of monthly premiums, but you may get things that you do not get from other companies. So it's really important that you do compare what you're getting for your money. There are different types of critical illness cover that you can get. There's level cover, which, as it sounds, you choose the amount of cover that you want and how long you want the cover to run for, and the amount of cover you get and the amount that you pay each month stays the same until the policy ends. So this is a good option if you're looking to maintain, say, loved ones' living standards, and can help to cover things such as your salary, any additional health and living costs that may arise from whatever condition it is that you're suffering from, rental payments, helping you to continue to make mortgage payments, children's school fees or other childcare costs that you may need to cover. Some people like to make sure that they're protecting their cover from the effects of inflation, and inflation can obviously eat away at the amount of cover that you have, especially over the long term. You can choose to make your cover amount increase in line with inflation, and this ensures that the lump sum won't be worth less in the future because of the rise in the cost of living. With this option, the amount of cover and the amount you pay can both go up each year, but that will be established at outset. Another type of critical illness cover is decreasing cover. So this is typically used to help pay off a repayment mortgage or other debts or loans if you're diagnosed with a critical illness during the term of the policy. It lasts for a specific amount of time, and your monthly premiums are a fixed amount unless you make a change to your policy, but the sum assured decreases in line with, for example, a repayment mortgage. Decreasing term cover is usually cheaper than level cover because the value of the sum assured decreases each time you make a monthly payment. So with a repayment mortgage, the amount you owe on your mortgage decreases every time you make a monthly payment. So if you want to cover that sort of debt, then decreasing cover can be helpful because every month your sum assured will go down, which should broadly be in line with how much your mortgage is decreasing over time. But do you need critical illness cover? I mean, it can be really helpful because you've got no idea what's around the corner for you in terms of health, but you can make sure that you're financially prepared for it. Think about the expenses you might need to cover if you are critically ill and you can't work. It might be your monthly outgoings like rent payments or general bills, or instalments on a loan or a repayment mortgage. And if you don't have savings to fall back on to help you cover those expenses, then getting cover such as critical illness cover can help to take the financial worry away while you're recovering or having treatment. That can be really important because if you're laid up in hospital or you're laid up at home and you can't get out and you can't work, if you have that lump sum payment made, then you or your family won't have to worry about certain things, at least for a short amount of time, because you'll have that money to cover what you need it to. But how much cover do you need? Well, that really depends on things like what you want to cover and how much you're looking to pay each month and for how long. All of those things will affect how much the premiums are. Obviously, the longer the term and the higher the sum assured, those will make the premiums higher. But if you're just looking for some sort of cover, then generally you can budget and get a good sort of base policy to pay out a sum assured of, say, 50,000 or something like that to give you some help if you do end up in that situation. But I would advise speaking to a financial advisor if this is something you're looking to do. Critical illness cover covers critical illnesses, and each provider will cover different illnesses. So if there is a specific illness that you're looking to be covered, it's really important you check that the provider you're looking to go with will cover that illness. There are some blanket ones that most providers do cover, such as cancer and strokes and things like that, but make sure you read the small print and you know what you're getting for the policy that you're taking out. So what are the most common critical illness claims made for? Most of them are for cancer, as I'm sure you would expect, as well as things such as heart attacks, strokes, multiple sclerosis, benign brain tumours and Parkinson's. But as I said before, every provider will cover different medical conditions, so make sure you check the T's and C's before you take a policy out. Critical illness cover can go really well alongside life insurance and can be taken out alongside a life insurance policy, but it can also sit well alongside income protection. So income protection gives you that monthly payment if you claim on it, whereas critical illness cover will give you a lump sum. For example, if you need to do things like renovate your house or put in a stair lift if you can no longer go upstairs, or any adjustments that need to be made to your property if they are needed. I hope it's been helpful, guys, and I'll see you next time.